Ladies and gentlemen, I hope you all are having a wonderful morning. All right, let's get into this. So, market's already open. I had this area up here, price action traded up into it, immediately sold off, which would be kind of anticipated. Happened right at the open. The open has, uh, kind of a strong open this morning. But then this bar came in for weakness. So looking at more of a range bound market condition right now, but price action was unable to make a lower low in here. So we'll see what happens around the highs. Let's go over to our profile charts. I'm going to merge this one day into the overall profile. We are trading off of unfair highs and currently trading down below value area high on our daily time frame. And then we come over to our current, and I'm not too worried about this day on Friday because it was a US holiday. We are not really doing much there, but we're coming off of unfair highs, moving towards value area low. Value area low around 29,800, and that's where price stopped this morning. So very rotational at the moment between the 29,800 and our highs around the 29,900. So about a 100-point range this morning in overall market context. But when we look at the US session, of course, it's going to be much less than that. And then we have this little area, which is in value, but this unfair low, or these LVNs here are definitely holding. And then we have our other areas above us and below. Not really a lot to go off of below. We don't have a lot of low volume in here. We can definitely see what's going to happen when we test lows, but we don't have a lot of areas we can actually take a look at in the context of the um, the unfair lows and the higher time frames. So what are we looking at this morning? We are very rotational, trading around rotation and initial balance. We can definitely take trades and initial balance for that purpose, but we're also not making lower lows in this context right now. So I'm actually anticipating the possibility of initial balance coming up and being taken out unless we rotate back down lower. I don't want to take a short here in this area because of the overall rotation. So I'm going to just kind of sit back and wait and see what this market decides to do this morning. I have some scalps that I can take to the long side from about this area. 920s to 912s. So, in this area in here, can definitely take scalps to the upside, but I really want to wait till we break through initial balance before we do that. That's going to push us back up into the possibilities of the 30s, which is around value area high on the longer time frame chart. So that's the perspective this morning of what we're looking at. I'm gonna be pretty slow to take trades here this morning. One, it's Monday morning. We're coming off of a holiday, and I'm just not seeing a lot of confluence in the charts. So we're just going to kind of just sit back, relax a little bit, and kind of wait and see what this price action is going to do. But I'm favoring more heavily to the long side right now because we're making higher lows within the context of initial balance. Good morning, everybody. Joining over from TikTok. Good to have you. Thank you for being here. If you have any questions, let me know. I traded some in the London session early morning. That's where that came from. I had one trade that was 3 contracts in the micros, and then I had the rest of them were just, single trades. The only reason why I'm in micros right now is for prop accounts. I think that teaching individuals how to scale into positions and scale in around areas, being able to still put one on in case it goes, but having areas to scale in with limited risk in the context of where you're scaling from, I think that is a much better approach to funding prop accounts than trying to be an all in, all out trader where you're at the whim completely of the markets. So that's the whole reason for switching over to micros. In the overnights, not my favorite thing to do, but most of those trades in the overnights were just one micro contract. I do have an area to short out of here on my longer time frame, but price action is making higher lows throughout this whole morning session so far for the US Open. So I'm a little shy, I guess, is probably the word that you could possibly use there for taking shorts out of this area, because I'm not quite so sure that we're going to break the lows. We're showing some strength. The higher time frame in terms of the US session is telling us that we could be looking at the long side here. We do have possible shorts coming up right now on a daily perspective of all sessions. And so we just kind of are out of confluence a little bit this morning. So I'm going to give this some time to trade around, and then I'm going to start making some decisions after we see if this market's going to be rotational or we're going to break out to the upside. It's never a bad idea to be conservative on your entries when the market is telling you that it's doing multiple things at the same time. We are trading an auction, and when participants are not aggressive on one side, you can move into a range bound market very quickly. Range bound markets I can trade just fine. It's the market shift between range and possible trending markets, even in short term trends, that can be very difficult. And right now we are in that shift. So I'm giving the market time to show me what it wants to do. Are participants going to get aggressive on the upside? If they do, beautiful. I can go ahead and enter around that participation at certain times and scalp around that. But is the market turning around at the same time and telling me it could be rotational 100%? And it hasn't told me what it exactly wants to do yet. This pullback is holding highs here, which is very strong indication of a continuation to the upside, but we still are in this range of IB. We haven't, really moved outside of the market shift of the breakout right now. And so I really don't want to call a breakout continuation play or rotation at this point in time, as I just don't have enough information to be confident in one of those two directions at this point in time based upon what the market is doing. Nikki, welcome. Saw Rebecca and a few other individuals join. Thank you for joining this morning. Again, if you have questions, let me know. I'm not doing too much at this point in time. Like I said, we're in a market shift right now, and we can move into a rotational market or break out to the upside. And I don't have a lot of confluence in one of those directions or the other. And when I'm not sure, I'm not clear. It's not sure, it's clear, it's clarity. When I don't have clarity, I sit on my hands and I wait. And in my viewpoint, there is nothing wrong with waiting for the market to give you a better structure. And now we're breaking out to the upside. So let's see what happens to this breakout. Do we just fall back into the range? How does this bar close? Where will we be expecting pullbacks? Do we get pullbacks into those areas? And look for a continuation play with possible momentum to come into the upside. Were there reasons to go long down here? Absolutely. Absolutely. Were there reasons to go short down here? Absolutely. And I don't like it when I have reasons to go long and short in the same areas, so I just wait. And to me, waiting and missing out on a bar like this doesn't affect me at all. Not even a little bit. This is somebody else's opportunity. Let them get their opportunities. I will get mine. We're early in the day. We're at 9:50 right now. We got plenty of time. Patrick, welcome. It's good to see you. If you guys have questions, let me know. C Trade, welcome. It's good to have you. What am I doing right now? I'm looking for a continuation play to the upside, but I don't want to buy a high. I want to wait for a pullback. Getting a pullback into this area right now, but I expect a little bit more of a lower test. Getting that test now. I'm not seeing buyers really willing to participate in this market right now, so awaiting. And we can go ahead and participate in a long here. Looking for possible quick continuation play to the upside. I am in micros right now. I don't necessarily like that, but it is what it is. I'm trying to show how we can scale into positions. This is not a position I would want to scale in here, but it is a position I want to give a tight stop to, because we can continue down here into lower levels of these highs. We can move back down into this area. I can always get back in. A tight stop there does not hurt me by any stretch of the imagination. Buyers are stepping in here off of the low, but see how we have the higher volume coming in here for the shorts, looking for a continuation play to the downside. I didn't see that as potential rejection off of the low. And give this a little bit more room now. This is an area that I can actually kind of start to scale into. We have lower areas of support in here. So I'm putting one on in case this market goes from this point and goes ahead and breaks out of the highs and starts to move higher. Just put the one on, wait and see what happens. But if we come back down into this area, I am definitely going to scale in. Pillow, thank you so much. I appreciate you and welcome this morning. It's good to see you on a Monday morning in this wonderful US session we have right now of breakouts and rotation and two different time frames of daily perspective telling us two different things. It's a harder day out here to trade at the moment. Be tight on your stops, be quick on your exits, know your areas, follow your plan, and trade on through. Hey, good morning, Ram. Good to see you this morning. What am I looking for in terms of a pullback? I'd like to see a pullback down here and buyer's initiative on the position again. So we're going to see what happens in that context. I will put a line in here just so everybody can see it and we can kind of get an idea of what we're looking at there, right? Kind of got that pullback there, but I was looking for a little bit deeper and just didn't quite get it. Would like to start putting size on in this area. And when I say size and the micros, 3-4 contracts, it doesn't take much to get some size, throw some momentum into the market at the same time. Even in the micros, you can have a position that's up $800, $1,000, $1,200 on a very limited risk. Hey, good morning, Prath. It's good to see you. News in 10 minutes. I think there is news in 10 minutes. Thank you for reminding me. I didn't even quite look. Most of the time I'll trade through news. I'm not too concerned with that. But yeah, we have the ISM. Eh, we can see a little bit of volatility through that. And that could be what the market is waiting for at this point in time. Eh, yeah, that's a good point. We're not going to get in size. Thank you. Appreciate that. I didn't even think about news this morning. My pre-market analysis is off. Um, I come over here from doing something else, and my mind isn't always completely here. So good call. Thank you. You got me to check on that. Um, ISM, we're probably going to see a little bit of volatility within the first couple minutes or so of that information. Um, Let me get defensive on this position in case that does happen. Let me see what happens when we get back up to the open of this bar. Defensive, I'm going to put my stop down in here just in case it decides to start running. You can already see that the market's starting to move a little bit quicker than it was before. And now we will wait and see what happens with this news. That is so rude. Really dislike news. So I took a couple expense trades this morning, down a little bit less than 100. One, because I got in around the news event that I was unaware of. Hey, at least I'm honest, right? And then we have the first position that I took with a very tight stop in here as the market came back down. I was looking for reasons to enter down in this area, but I didn't like the sellers down here getting more aggressive than the buyers. Now we down tick this by one tick. Let's see if we get buyers in here. Nope, not yet. We do have some selling pressure into the market here, and then that would be a reason to go long if it wasn't for the news. Looking for a scalp back up here to about the 30,010 range. I will do day trading as well, not just scalping. The scalping I'm doing primarily, this is the way I'm looking at it. If you want to go into a day trade, you want to go into a swing trade, you want to go into a position trade, each one of those has one thing in common: the entry area. And if we learn how to scalp within the entry areas, we can take any trade from a day trade or from a scalp trade to a day trade to a swing trade to a position trade. It's all just a matter of how are you going to manage that position from the time of entry. And that's what we use longer time frame exits for as well. This area here has been kind of an area where the market has traded around a lot. So this zone to me is a rotational scalp zone, not an area that I would want to turn around and start holding positions for potential day trades and those type of things. It's just not an area designed for that based upon my form of analysis. Um, and so just, in that context, right? But if we can learn to scale into positions on a scalp, you take some off just like you would on a scalping position. Now you're locking in funds, right? Just like I had this morning. I haven't taken an expense because I've already locked funds in this morning. I've taken expense off of profits, but not off of account drawdown, right? I'm watching buyers here. I'm waiting for this high. If we break this high, I'm anticipating some momentum to pop in as we come up and we test these areas right here. That's the premise for this long right now. If we come back down into this area, I have reasons to scale in, especially if we come back and we test these highs again. Buyers getting a little bit more aggressive there. I like that. I'm going to give this a little bit more room now due to a little bit more of the volatility that's coming in, looking for these highs to get tested again, momentum to come in to pop us through these highs to test these higher volume areas above us. This is a scalp position, so I am going to be a little bit aggressive this morning on my exits. I'm waiting for this high to break and to pop, and I'm going to start to trail my stop out of the position. I'm going to move it right below and around these areas of high volume. And there's my first position, back up to break even on the day again. Now I'm going to move this to here, and I'm going to see if we can't come up and break this area. I don't like the sellers here at this high. And I don't like the fact that we're not rotational in this area where we're not making higher highs, or, like we made a little bit of lower lows, right? But the lower lows are all in the context of buyer's support coming off of the lows, which means that we have rejection down in the area, but we're not making higher highs. Now I'm going to be very careful on my longs because we're not making higher highs until we get up here into the area. So I recovered from the expenses this morning, cancel all my orders, and now I'm waiting because we're rotational in this area, but we're not seeing the higher highs. And if you're not seeing higher highs in the market, what should you anticipate to have happen? Lows to be tested. And if you're looking at area to go in long, but you're anticipating lows to be tested, what are you doing, right? Market's not flowing in that context. It's footprints, bro. Chill. What the hell is this setup? So yeah, it's footprints is a setup. So what I'm doing with this setup is I'm utilizing auction market theory and volume profiling. The volume profiling has given me areas of interest on long time frame charts, daily perspective and 30-minute. Then I'm using a short-term chart to give me volume. And why? Because volume and price are not leading indicators, but they are the closest to indicators to the live edge you can possibly get. Every other indicator out there you can use is time-based. The more time you put into the equation, the more lag you have. Lagging indicators are there because of time. I take as much time out of the equation as possible, but I bring it back into the areas that I'm willing to do business in. So I'm utilizing time to show me areas of possible rejection or acceptance in the market through areas of higher time frame through price and volume. But then I turn around, take that information and say, okay, how do I want to respond to that information based upon what auction participants are currently telling me that they're doing in the market? Am I using indicators? Am I using pullbacks? Am I using those things? No. Why? Because there's no magic mathematical number that works in the context of anywhere. And there's no brokerage firms out there doing that, or money management firms. How do I know? I started trading in 1998. I was in a brick and mortar prop firm in 2008. I was in the trading floor in commercial mortgage-backed securities in 2006 and 2008. I've been there. I've done this. I retired in 2019 in December due to a divorce. Then I turned around and came back this last April after deciding that I really kind of wanted to stream, do something with my life, do something where I can give something back. What is it that I want to do? I started seeing traders out there, and I'm like, hell no, because nobody's teaching this stuff in this type of open forum. Let's play, let's do it, and let's see what happens. And just trading the little micros, one contract at a time, I'm already up $447 in a day. Come over and look at some of my live streams where I'm up $2,000, $2,500, $3,000 in a day, because I'm trading, the minis, but I can still do it in the micros as well. So, you can say what the hell you want to about this setup, but the results stand for themselves. Hello, welcome. Appreciate you. This is not about indicators. This is not about pullbacks. This is not about anything else. This is about being able to understand what the market is. And the market is nothing but an auction. And then be able to understand what you should be expecting within an auction. Participants, buyers and sellers. When an auction is healthy, it's going to run flat. Why? Because for every buyer, there's a seller. For every seller, there's a buyer. What makes it move from flat? When one gets aggressive over the other. Sellers get aggressive, buyers get aggressive. What happens happens in the context when they get aggressive? Can you read the aggressiveness? What does that aggressiveness mean? Where are you expecting the market to go after one participant is aggressive over the other? What are you actually doing? I'm not running a 1-to-1, 2-to-1, 3-to-1 risk reward ratio. Why? Because those numbers don't work and they don't care about the auction doesn't care about those numbers. What they care about is participants. Right there, see? Sellers coming in, less aggressive on this short, buyers step in, should be long. Why am I not long? Because we're not in a nice rotational market right now. We're not making higher highs yet. I'm waiting for the rotation to come back into the market because we can fail these highs at any given time. And I don't want to be in a scalp position where I can't expect where I want to be out of the market. And I don't want to just take a scalp position down here and then turn around and have to get out before these lows because there's not enough room for potential profits in there for the risk I'm going to have to take later on. Can I get your Discord link? I'd like to join your community. Absolutely, Pello. Here. Let's find it. Let's see if that works in that. It does not. Let me get you the link. Hold on just a second. And everything's free. I don't charge anything, guys. I don't do anything else. You guys are already paying enough for what you're getting out there, and it's a mess. And I've been there. I've done that. I've been in that mess. So yeah, we'll leave it at that. I have nothing bad to say about anybody out there doing this live and doing anything else. I do question at times what they teach. There we go. There's a link for Discord. Ranging money, Path, absolutely. It's a ranging Monday, right? And you know, Path, you've been around that I trade ranges just fine. But we're not making the higher highs in here right now. We're not making, we're making some lower lows. So I'm questioning the validity of this upward move here at the moment and a possible false breakout. I'm not saying it's going to be a false breakout, but I want more information before I try to go long again. And you also know my favorite setup, right? We barely break a low in here. Buyers get aggressive. It's time for me to get in. Nice momentum bar, but where am I going to go? Back to this area here, make a possible 20, 30 bucks? It's no, thank you. No, I don't want to get caught up in that right now. Most traders would call this chop. This is not chop. This is the auction trying to facilitate price because nobody's aggressive. There's no aggressive participants. The only place where we have an auction this morning in terms of price is right here, an area where buyers and sellers start talking to each other at the same price, right? So we're looking for resistance up here anyhow. We're starting to trade through that a little bit, but what do we have right above us? More resistance. What are we getting as soon as we break these areas? Sellers coming into the market. We don't know if buyers are going to respond aggressive or not. We're not going to know until price proves what volume is telling us. I don't enter just off of volume. I'm entering off of volume and price. Volume and price need to have a level of confluence before I'm comfortable getting into the market, because if I get into the market without that confluence, not a confluence of time frames, volume and price, because that's telling me what the participants in the markets are wanting to do. And I'm in value right now on a 30-minute perspective. And what are you anticipating when you're in value in a 30-minute perspective? Rotation. And rotation is narrow like this. Potential profits are narrow as well. Risk is kind of narrow. But what happens when you have narrow risk in a tight range? You have the probability of getting chopped up because the highs just barely break. But also, I don't enter longs and shorts in this area. I'm entering longs down here. I'm entering shorts down here, or up here, excuse me. I'm looking for the target down here and looking for the target down here. And now we're starting to show a little bit more rotation. This is my auction right here. We get a pull back into this area. I'm willing to take a shot to the downside, anticipating price action to come down and test these highs down here. Let's go ahead and do that. Let's see what happens. Seeing a buyer here, I want to see price action move higher, test back lower again. I want to see sellers step in. Now I'm willing to get into another one. I'm seeing rotation of buyers to the upside, but sellers coming back in at lower prices. Now I'm risking $100 on the position. Can it stop me out? 100% it can stop me out. But I have reasons here to be short because of the volume participation and price action moving down into those areas in response of sellers stepping into the market. Now we have nothing but buyers stepping into the market. Chances are this high is going to be taken out, but I don't know until it's taken out. And I don't have anything really telling me to be aggressive in my stop yet because price action's not moving in that direction. Now it is. Now we start hunting for the long positions. You're going to take expenses in the market. But what are you taking expenses for? Because you put a random stop in and you're hoping and praying that a 2-to-1 risk reward ratio is going to be hit? Or are you going off of what the market participants are telling us? And what are the participants telling me right now? We broke a high, but look at all the buyers up here. Okay? Look at all the buyers up here. We were unable to hold that high. I'm going to take another shot to the downside. But very small risk this time. I'm not going to be adding into the position until we start making lower lows because we are making some higher highs, but we have rejection above us. I'm anticipating this market to stay rotational. Why? Because we're in rotation of the higher time frame chart. Now we're getting buyers aggressive here at the highs. Now I can turn around and get aggressive on my stop to limit my risk. Why am I limiting my risk? Because I'm anticipating this high to be broken now. And now I'm switching over and I'm thinking longs. But I need to see this bar and where it closes to tell me where I'm going to be hunting long positions from. Not one of my better sessions this morning, Prath, but you know what? This is like that, the 24th that you gave me, right? It's one of those days where it's much tighter range, right? Price action is breaking up to the upside, but I don't have anything telling me that buyers are actually strong in this market right now. So it's a market shift, and market shifts are the most difficult to trade. But I'm still taking my shots. I'm still managing my risk. I've had 2 expense trades in a row. If I have one more, I need to stop on the day. Why do I need to stop on the day? Because this is just a market condition that I'm not reading well. Let my read tell me when I should stop trading. Let my performance be the reason that I continue to trade. Not because of a dollar figure or a dollar amount. Put one on here, anticipating a possible breakout, right? Move your stop down so you can add back in. Where are you looking at adding back in? Right back into this prior range. We have stronger sellers down here. I'm anticipating us to come back down and test this area down in here. If we do, I'll add another one. Where am I looking price to go to? I'm looking for price to move back up into the 70s right now. So we have plenty of room for potential profit. 70s are all the way up here. This is trading. And sometimes days just don't work out for you very well. But my days that usually don't work out is when we have a market shift like this. The market is shifting from value into a different market condition. And those conditional days can be very difficult to trade. But I'm keeping my drawdown to a minimum. My high in my account value today is 450. I'm still up 298. If I get stopped out here, I'll still have a break-even day. Enough to go to Starbucks. Right? Starbucks money, whatever it might be, right? And that's about it. Not actual revenue today. And so if I keep having days like this, well, then what? I need to adjust what I'm doing a little bit, but how do I know what I need to adjust? Because I've had a day like this? No. This is why I come on at 2 p.m. every day. 2 p.m. so I can come back and I can practice. I can't practice this session at 2 p.m. because the data's not there, but I sure in the heck can tomorrow. Tomorrow at 2 p.m., what am I going to be doing? Practicing this session, see what I could see what I can see better in these market shifts conditions, then take that information and apply it back to the live edge next time I'm in a position like this. We're constantly learning, we're constantly growing. You're also in a trade, Just? Yeah, a lot of individuals in here from India, Pakistan. You know, it's amazing. We got some individuals from the UK. Love it. It just gives a different perspective of things, right? And where am I looking at price action to possibly go here? Like I said before, up to the 70s. I only have one on, so I can't really do a lot in the context of money management right now, but I am looking for momentum. If momentum comes into the market, I'll start scaling out, or not scaling out, but trailing my stop and trading this as a regular scalp position instead of hoping and praying. And so somebody earlier asked, what the hell is this setup? This is a setup that you won't see charts like this at any asset management firm. You will see time and sales, you will see volume profiling, but this is as close to what we can get and how we utilize data and information, because you have to remember those individuals are using the information differently than what we are. They're not looking at getting into a direction and need to be right. They're looking at getting into areas so they can get through their inventory. Price action now rejecting off of the highs right below value area high, showing signs of rotation, not knowing exactly what the market wants to do because participants are not strong on one direction or the other. I'm giving this time. I'm giving this time to develop. I'm not getting crazy with it. I know where my risk limit is and what's happening in current market condition. Price action is coming down off of a pullback of what could be a false breakout or a continuation play to the upside. Just I tried the thing which we had discussed in choppy markets, that retest one. It worked, increasing my rate to a minor 3.2% increase. Beautiful, beautiful. I should have been long this morning on this bar. I should have been. I didn't, because we weren't breaking the highs in here and we're making lower lows and lower highs, and I just didn't like it. But I should have been long from down in here, and I just didn't push the button because I didn't like the fact that we weren't moving higher in here. So that was my mistake this morning of not getting into this long. And that's not me saying, oh wow, look, I should have been in here, I made a mistake. No, it's about understanding your methodology, understanding what you're seeing, understanding what you're looking at, being honest in your execution of what you did, but being honest in what you're actually seeing in the charts, because that's what's going to allow you to that's what you're going to bring to practice. You're not going to bring your, okay, well, here's my retracement, this is my area, I need to be entered. How do you practice that? This is something that you can actually practice. How well are you seeing active market participants, and how well are you reacting to that information? Now that's something that can be practiced. And what do you want? You want LeBron James basketball, or do you want a skill? because I can hand you as basketball. There's a retracement. Beautiful. There's your long. And you can do it anytime you want to. But what's the skill in that? Because you can see a high and a low, and you can anticipate where the pullback is going to be because it has a percentage and a number and a line there. I don't know. They might be doing better than I am today. Who knows? Because I might having a very good morning. But that's okay. This stuff happens. There's buyers there. I'm going to go ahead and add another one. I'm going to go ahead and get prepared on a stop here just in case we do start breaking out of these areas. I do want to stop where I can trail out of the position and limit my risk, because we still have sellers at this low, which can absolutely be tested, especially since we didn't make a higher high intraday bar, right? Now we got buyers responding, and this is what I'm talking about, right? Nobody is in control of the market. And if you don't have anybody in control of the market, you're going to be in rotational market conditions. And right now, we're in a tight rotational market condition. Do you leave the trade if, like, assume you have 5 confluences and any one is not in aligning, or you take it with little risk? Just take it with little risk. As long as I can get in with little risk. I don't necessarily look at all of the confluences other than the daily perspective with like the 30-minute. That's really what I'm kind of looking at in confluence. Everything else, I'm just watching market participants, right? I'm watching buyers, I'm watching sellers. I'm seeing where they're strong. I'm seeing where they're weak. I'm seeing where they test and they can't break price lower and it moves higher again. I'm seeing how price reacts to that. Do we come up and break highs now because buyers are getting aggressive in the market, right? Or do we come back after that test, retest the sellers again, and possibly break the lows? Getting a little bit aggressive on this only because price action is so rotational in this area. We do have sellers stepping in here. The buyers are trying to step in, but each time they do and they retest the sellers push us back into that area of support, and the buyers are not lifting the price higher until just now. See that rotation that happens within the bars itself? Those rotations tells us so much. I don't need to be on a 30-second chart or a 1-minute chart with all of this. My 2 minutes just fine because I can watch the micro rotations within the bars themselves to see what's going on. Because I did this with just time and sales and stocks for a couple of years. That, and I've been watching Footprints since 2012. So took 6 years off, but I'm better at it now than I was before. Why, I don't know, but I am. Barely broke the high, right? Now I want to I want to take what the market's going to give me. I want to be aggressive on this because price action barely broke that high, right? And sellers immediately stepped in. Now we're going right through the place where support is. I want to be highly aggressive on my stops right now, lock in what the market's going to give me, and not take any more of a risk than I absolutely need to. That's trading. It's not hoping and praying. You're watching what price is telling you, you're watching what volume is telling you, and you're getting aggressive or passive based upon the information that it's telling you and the area that you're in and the overall market condition and your comfortability of trading that market condition. Not because you're in, because an indicator is telling you to, or because a line's telling you to, but because you're reading actual price action with volume and you have the confidence to do it. And you know what markets you're good in trading at. You know what markets you're not good at trading at. I'm not good at trading market shifts, so I'm getting myself aggressively out of the market because I don't like what volume is telling me and how price is reacting to the volume that's coming into the market. Just keep in mind there could be one slippage, two commission. These extra losses could make more losses. Absolutely. It's above the previous day high now. Yeah, exactly. It's above the previous day high now, but it's rotational. So if it's above the previous day's high and it's a rotational market, what should you be expecting from that high? Just because it broke the high, are you going to anticipate that it's going to continue up? If it's rotational and we just broke a high and you receive rejection or sellers getting strong, you should be anticipating it's going to move back into lower areas of value rather than breaking the high and continuing up. And we have nothing in this market right now telling us that buyer participation is strong. Not yet, anyhow. We've got some nice bars, but each time we get those bars in, the sellers immediately step in and stop the direction. We just haven't made lower lows yet. But what happens is the more often we test highs and we don't break them, or we barely break them, we're going to test lows. And eventually we're going to test a low that's going to break if we can't break higher highs. Hey, San, how's it going? It's good to see you. Is this a continuation trade? No, this isn't really a continuation trade for me. What this is right now is a rotational market condition that broke out to the upside that doesn't know what it wants to do. That's how I'm reading price action right now. I can't say in any other terms than that. We don't have any participants aggressive in the markets right now. And look at price action. Price action is not moving aggressively in either one direction. At times it's moving aggressively, but that's only to test prior areas, not to move into new areas. I have an ultimate combo. Well, thank you. I appreciate it. One Punch Man, right? I mean, again, this is trading. I'm not hoping and praying that the highs are going to break because we broke yesterday's highs, right? I'm anticipating a tight rotational market right now. We're getting a tight rotational market. And if you try to trade a tight rotational market, you're going to get tight stops hit. It's just going to happen. And you're going to have drawdown. Do I have drawdown for my high of my account value today? Yeah, I'm down about $100 today, trading micros, 100%. Do I care? No, because I'm only down $100. And we're not going to stay in a range like this for very long. The market never does. Because the market doesn't like to be healthy with every buyer there's a seller and every seller there's a buyer. It likes to move. And on a Monday, after a long 3-day weekend for most traders and most people, they're still recovering. They're probably not going to be showing up until like 10:30, 11 o'clock this morning. Wait until more participants join. We're not showing any signs of participants actually joining this market right now. Wait. Hey, Zhao, how's it going? It's good to see you. Heat map with all this? Yeah, I do have a heat map up. I'm still developing how to read a heat map. And what's the heat map telling us right now? We're trading in this range, but in this range of trading, and the reason why I'm not short is because we keep testing and finding buyer support into this high, where we did have market participants active, but price action can't make higher highs. So I don't really want to be in either side until we get a breakout. And what happens if we get a breakout? Well, if we get a breakout into this market, it's going to be kind of nice, right? We get a breakout to the upside, where's it probably going to go? It's probably going to come back down and test these highs right here. And what it does, that's where it gives us the entry point to look for a possible continuation play to the upside right down here in this area of a test. It just hasn't happened yet. But that's the reason why I took a long this morning. But I did have the wherewithal. I just didn't have the confidence, and I should have had the confidence to go long this morning right here. Why? And I'm going to show this to you of why. Not because of what price is telling us, right? 1,200 sellers, 845 sellers, 274 buyers, 784. Price action came down, broke the low by one tick, 112, 125 sellers. Sellers are drying up. Then you get the same amount of less buyers over here than over here at the low. But look at the buyers step in when we crossed over the open of the bar. Why didn't I go long? Because we weren't making higher highs. We're in a market shift, market condition, and I just didn't want to take the risk down there. But I took the risk up here, so I should have been willing to take the risk down here because this is a number A prime setup right here. Barely break a low, price action comes up on low volume after we tried to test a low and break it on much lower volume, seller absorption. That's all it is. And I should have had the wherewithal to take the long there, and then I wouldn't be down for the day. But I didn't. This, I need to practice more. I need to be able to practice, and even though we're not seeing the higher highs in this market shift, I need to put that into context, watch it over time, and see if I can get myself to actually take those entries later on. Not because I'm saying, oh, that's what I should have done and I should be in profit. No, bring it back to practice. Bring it back to the lab. Look at it. That's a science experiment that I need to run later. Not to come in and say, woulda, coulda, shoulda. All right. C players, add subtitle English on your live sessions. San, absolutely. What I will do on my live sessions is I will go back and see what I can't do with the translations. That's a great idea. I appreciate that. Any views on news trading? Yeah, I usually trade through news just for the most part. Not in all markets, but usually in the indices. Why? Because news is usually already priced into the markets. Look, is there market manipulation going on? Sure, but not the way that people think. Not the way that people think at all. Take the Wall Street Journal, for example. Why does it exist? For top companies of CEOs out there to communicate with one another. They communicate with one another within the articles and the things that they say. We don't know that because we're not privy to the way that they speak to one another through that information, but they're constantly speaking to one another. This is why moves usually happen before news comes out, not after. Also, the Korean market is entering on Friday. Yes, exactly. Do I cook breakfast for myself? I do. I do all my own cooking. It's a great question, Prav. SpaceX will join NASDAQ tomorrow before the market open. Yeah. SpaceX will be on there, but that's all priced in. We might see a little bit of a knee-jerk reaction, or we might see more participation tomorrow than normal. Okay? And that's that's the key, guys. If it's a news event, you're going to see more market participation. You're going to see more buyers and sellers active at certain prices. Why? Because what you guys call smart money, which is really just the investment firms, are moving money. They're selling and buying, and you should see that within the auction. And once you know how to read auctions, you can anticipate what you would expect an auction to do. Did we break out of the high here? Sure. But what did we do? Moved right back into this range again because we don't have auction participation right now. This is monkey hour. We've got retail traders in here, and that's about it. Nobody else is here to actually move the market, and retail traders on their own don't move the market because they're all over the map. They're not talking to one another. They're not doing the same things. They're not correlated together. That's the issue. What happens when retail traders come together in a particular direction? GameStop happens. That's exactly what money managers do. And you see the same movement in the markets when they come in, because they start trends on longer time frames. I'm not using VWAP on your strategy. No, Zhao, I don't use VWAP. I don't use VWAP because honestly, I don't need it because I can already read the information in the order flow, and I don't need to clutter up my charts with just more data. I clutter them up enough with lines that I can just go back and erase later. But no, I don't use VWAP. There's nothing wrong with VWAP. VWAP is, it's just it's smoothed out volume. And what do you smooth out volume with? Time. When you add time into your indications, what happens? You make it lagging. I read it real time, not in the lag of VWAP. And perhaps just so you know, I usually don't eat breakfast. I usually fast for about 14 to 18 hours each day, and then I'll eat around a 4 hour period. And then that's my eating phase, and then I'm done for the day. And I'll drink water. I have 1 Celsius in the morning because I don't drink coffee. And then that's pretty much my only sugar slash caffeine drink that I have in the day. And then everything else is just water. That's why my hairline is so good, according to you, of course. Not because I would say that about myself. Although I have the self-confidence to do it. We do also have an area of low volume above us here. This area here is coming off the 30-minute chart. The 30-minute is telling us we have possible rejection above us. Keep that in mind. We're not quite in that area yet, but what are we expecting when price action comes up here? We rotate back down into lower areas of value. Lower areas of value being down into value area low of the long-term perspective. Not a great day of trading today. I'll give myself a B because I missed this area down in here. Everything else, I managed the money management correct. I took my shots when they were there. I added. I didn't let the sideways market condition keep me from adding positions. I was highly aggressive on my stops and my exits when price action wasn't behaving in ways that I wanted to. Am I down for the day? Sure. If I would have taken this position down here, I would have given myself an A+ on the day, not because I'm in revenue, but because it was worthy of an A+. Because I missed this position, that's a B. But everything else, absolutely phenomenal and traded today. I think I did a great job in the market read of the market condition, anticipating rotation way before it happened, identifying the market shift as it was happening, looking at this as a continuation of the market shift rather than an actual trend, and trying to trade it in a trend condition. Getting in here off of my long, I think was absolutely phenomenal. Adding into the position, I thought was absolutely great. I think I got in here, not back here, but over here. I thought was absolutely great. I think I managed the market condition very well, especially for a market condition that is my weakest condition to trade. I don't trade market shifts well. I never have. Because in the context of auction market theory, price action can do one of two things in that caliber, right? Three things, really. It can go flat, kind of like it's doing right now. It can move back into rotation, or it can start to trend. I do much better once the market tells me it's doing one of those three things. I can stay out of a range, tight range, when it moves into the tight range, right? If it moves back into value, I can trade that value quite well. If it starts to trend, well, we already know that I can do the trends because I took one here anticipating a continuation to the upside that we didn't get, but it didn't get hurt. It's 10:39. I do need to get going. Any last questions before I go? Go ahead and put them in the chat. I can get into Discord later on and answer those. And I'm going to be here to practice at 2 p.m. New York time. The practice is the most important thing. This is kind of the stream to show off the demonstrate the growth from the practice. Okay? The practice is where we develop. We don't develop at the live edge. We show our development in our live edge. And here I showed today that I still need to develop more trading around market shifting conditions. Not to explain away an expense day, but to be honest with myself so I can further my own personal development and my ability to trade various market conditions. Thank you very much, everybody, for being here. Thank you for your questions. Thank you for your continued support. Thank you for the likes on the videos. The channel is absolutely growing, and it's because you guys, right? You watch the information, you like something, you're liking the videos, you're subscribing, because you want more information, and you're providing comments, and the algorithm absolutely loves all of that, and everything is moving forward phenomenally on that. I want to thank everybody that has come in today and has followed on TikTok. I truly appreciate each and every single one of you, and I look forward to seeing everybody today at 2 p.m. New York time. If you can't make it, don't worry. I stream it live, and you can go back and you can watch the replays. If you have questions, drop in over Discord. I put the link into TikTok. Somebody, if you can put ! Discord, individuals can join there. I showed all my trades this morning in the London session in Discord as well. So you guys can get all the access to all the information as it's happening, even though it may not be happening live. I'm all about authenticity. This is who I am. This is what I'm doing. This is what we're doing. And if you feel like it can help you, come on board and let's get into it. Thanks, everybody. I hope you all have an amazing day. Be safe out there in the trading. We are in a tight rotation. Be careful. Be careful. Be careful. And happy trading. Enjoy, everyone. See you all this afternoon. And until next time, be safe, be kind, and know that you too are loved. Enjoy. Possible buying opportunity here.